Hello, everyone, and welcome to another edition of the Smart Investor Market Show. Okay, it's Monday. I hope you all had a wonderful weekend, and I also hope that you enjoyed the weekend, relaxed on the weekend, and didn't have too much anxiety as to what would happen in the markets. Markets are rebounding today. We see the in front of us we have a chart of the S&P 500, and we see that the markets are up comfortably, and also some of the fear that was in the market has abated. We see that the VIX is also down on the day, and it just goes to show that there's some uh, more confidence stepping into the market from investors. But as I said, be warned that this is a period of increased volatility, especially in the latter part of August. So we need to pay attention to that and be very vigilant as to what is happening in the markets. Currently, as of this recording, the Dow is up 147 points, the Nasdaq up 82 points, and the S&P 500 24.83 uh, points. In terms of percentages, the Nasdaq is up 1.31%, doing better than the other three indices. 1.02% on S&P 500 and 0.68% on the Dow. The VIX, not surprisingly, is down at 19.99%, and that it just goes to show that the fear has really been abated. Now, what are we looking for this market rally to continue? What we're looking for immediately is for the market to take out this high that was made last week. Until the market remains below, or if the market remains below this level, then we have to be cautious of this rally, because oftentimes what may happen is that markets, this was in a channel situation, the market broke out of its channel to the downside. We get a recovery rally, and we also get a move back down. So you have to be vigilant, and I will be more confident if the market was able to take out this rally, or this all-time high that was made in the S&P 500. That will indicate to me that the fear is really down, and the smart money, or the big money players, are pushing up the market further. Looking at the Dow Jones Industrial Average, the chart pretty similar. The drop in the Dow wasn't as dramatic as S&P 500, and what I'll be looking for is the market to close above the 22,132. This is actually a futures chart, so let's just take a look at the end of the Dow. Okay, so we on the cash Dow, we want to see the market close above 22,179, and on the futures it is 22,132. A slight difference in the value of the Dow. Now, taking a look at the European markets, I believe these charts are not up to date as to what happened today. But as you can see, the German DAX is still down much further than what the Dow was in terms of percentage. This market actually topped out in June and has been steadily declining. So while the S&P 500 and the Dow is at or near its all-time high, we see some divergence in what's happening with the German DAX. So while the Dow is moving up, the German DAX is kind of moving slightly down, and that is a measure that we have to be cautious about. Because sometimes the German DAX and the FTSE in the UK tend to lead what's happening in the markets. A positive is that the FTSE is at or near its high. So the German DAX is definitely telling something different from what the FTSE and S&P 500 is saying. Taking a look at the gold market, a lot of interest still in the gold market, and curiously or significantly, gold has rallied up to this area of resistance, and what we're seeing is that the market has is selling off after hitting this area of resistance. What still can happen is that the market finds support in the 1280 level and we see a rally to the upside. That is definitely possible in this market. So all the gold bulls at this point in time, just be cautious and keep an eye out on the closing levels of this market, because if we do collapse downward into the 1200 region, that would indicate that this test has failed. And as you can see, it has failed one twice before, just below that $1,300 region. Sellers are clearly lined up at that level and are selling the market somewhat. What the bulls want to see is the market close above that level. That would take out all of the offers at 1,300, and that will give the green light to further gains in the gold market. We do get a lot of interest in gold. I myself am bullish on gold. I I believe that we bottomed here in 2015, late 2015, and have been positioning portfolios for the eventuality of gold entering a new bullish phase. This bull market in gold could last a couple of years, but sometimes what we have is when a market is bottoming out, you have a period of uncertainty, and I believe that is what we're going through now. Taking a look at the US dollar index, the US dollar is up on the day. That chart is not really reflecting it. I've been having problem. Okay, it came up. Okay. Since morning, this US dollar index, the ticker has been on and off, but okay, it's updated now. So the US dollar index is up on the day after making a low of the year near the 92.67 level. Dollar is still receiving pressure, but we're on an area of support in the market, roughly from 94 probably down to 92 or so. This is an area of support in the market, and you can see from the weekly chart of the US dollar index, this is a weekly support point, and we could see buyers come in this level. Looking at the euro currency, euro is down slightly on the day, and the what we want to see is for the euro bulls at least. If you want to remain bullish this market, you need the market to stay above this 117 level. A close below 117 level, 117 could indicate a further pullback, and we could even pull back into the 113 or $1.10 level on the euro. The euro, I believe, is just like gold, is trying to put in a longer term bottom. We have had a 8-year bull market in the value of the US dollar. US dollar topped out in 2008. This is a weekly chart of the US dollar versus euro. Sorry, the euro topped out against the dollar in 2008 at this level here, and we have been declining ever since. And I believe what the market is trying to do is put in a bottom. This bottom obviously could fail and the market take out this level, but that's what I'm seeing here. The market is trying to put in a longer term bottom. If that occurs, or if the bottom does occur, that would be now would be a good time to look at buying the euro versus the US dollar, because we could be in for a multi-year rally in the value of the euro. Just something to keep an eye out on. And a Smart Investor Show here, we will be giving you the up-to-date analysis of what's happening. Now, what I want to look at also is has-beens. And what I mean by that is a sector that used to perform, used to give us profits back a couple of years back. This ETF, this sector was on fire. It did fairly well. The market was giving profits to folks who were bullish that sector, and it is important as investors to recognize that when that market move has ended, and that sector is, or that ETF is IBB. Folks who have been following me for a while know I was very bullish on IBB. That is the biotechnology sector. The ETF did very well. Let's just give you a big picture outlook. This is a monthly chart of the ETF, and ever since 2009, the market was hovering around the $55 region, and between 2009 and 2015, this market just exploded to the upside. So from 55.60 all the way up to 400. Market topped out at 400 and has declined and is currently at 285. And this illustrates why it's important to pay attention to the markets, why it's important to know when to get in a market, but also know when to get out. Because a good investment strategy won't have you holding on to these losses all the way down to $250. We're bullish. We're recommending buys all the way up, and eventually the market turned around. And this is what I consider or considered at the time a has-been stock when the market was bottoming into the 250 region. So how you do you play something like this? Market is booming, you maintain the longs. When the market corrects significantly, you exit. But a curious thing is happening now. We see the market trying to resume its uptrend. It's trying to resume its uptrend. So this is a market I will be keeping an eye out on for the longer term. Now, the problem with this emerging uptrend in IBB is that the S&P 500 looks exhausted, and if the S&P 500 declines, it will take IBB down with it. So this is something that you would have to keep an eye out on in light of current market conditions. But this is something that if the S&P 500 really continues to go up to 40,000, as someone predicted the other day, this could be a move that probably you see a recovering biotechnology sector. Would I recommend getting long this market now? No. It will be something I'll have on a watch list, and something I would be keeping an eye out on. I'm just highlighting it, that it's something to keep an eye out on, not something to go ahead and just go and buy tomorrow morning or even today. So let me just make that clear. Taking a look at the some individual stocks, we see. Let's just take a look at Alibaba. Chinese stock. Some folks call it the Amazon of China. Alibaba is currently near its all-time high of 154. Or sorry, the all-time high was 160. So we're currently near the all-time high, and this is a stock I would recommend for a hold. I would continue to hold this market. Beautiful looking uptrend. Market has, ever since 2016, it started on its uptrend. Buy signal was generated in the $100 region. Actually, multiple buy signals were generated. One at 60, one at 90, one at 100. So this is a market that I would recommend you continue to hold this stock. Facebook, the darling of social media. I was in a restaurant the other day and saw some younger, well, I would call them kids, but some young women in their 20s, and I was with my wife, and we were having dinner, and three young girls came in, and they were having dinner also, and all three of them were just in their phones. They were just it looked like to me the entire dinner they were just in their phones. They were taking selfies of themselves. They appeared to be on Facebook, and and they were just in their phones. And I was wondering to myself, why go out to dinner? Why go out to eat if you're just going to be in your phone? Uh, this generation now is just interesting. You just look around, walk around, you just see people just in their phones, in their phones. It's like life is just passing them by, and they're just glued to their phones. But Facebook, for us, what we need to remain glued to is the price action here. And Facebook market is currently at its or near its all-time high, and this is what I would recommend as a whole here in Facebook. Resistance on Facebook is at 175. What you'd ideally want to see is this market clear the 175 level, and you could be in uncharted territory for further gains here in the market. Facebook is a fairly widely held stock, and if we do get a significant decline in the markets, this stock will also go down with the general market. So just be aware that this holds some general market risk. Another stock we'll take a look at is, and clearly on this show we cannot look on every stock. So that's why some shows I look on different areas, different stocks. We try to look on commodities, forex markets, and ETFs, just to give you a broader outlook as to what is happening in the markets, because oftentimes investors are just solely focused on stocks, and when stocks start to decline, it's like there's no plan B. There's nothing else that they can do. And I'm just here to say that there are other markets out there. Yes, stocks are bullish at this point in time, and I would say during this bull market in stocks, the majority of your portfolio should be in stocks. I would say that, but just remember, other markets are out there. Other markets are poised to rally, and I believe one of those markets is gold. It's poised to rally, and when stocks lose their shine, a efficient portfolio and a good portfolio essentially will move move different move your move your money into different asset classes that are performing well. That's my opinion, at least, and I believe that's a fairly good opinion. Now, Anet ANET currently at or near its high for the year, and at or near its all-time high. This is a stock we covered previously. It's good to see that with the market rebound, this stock has also or is also rebounding. So we want to see this take out the 175 region. This also is what I would say is a hold, and as you can see, the price action is very positive. Tomorrow we'll take a look at some stocks I believe is a sell, actually. And if you hold some of these laggards in your portfolio, my advice is probably just to get rid of them immediately. And I will cover that in tomorrow's show. Well, I was reading I was reading an email earlier, and the person was very down on the markets. They were saying this market is going to collapse any minute now, and that he has some recommendations that the stock market is going to collapse, the energy sector is going to do well, the biotechnology sector is going to do well. I asked him what's his basis. He said it's just his gut feeling. Well, I don't really invest based on gut feeling. I like to look at what the prices are saying, what the charts are saying, price action is saying, because price action dictates my movement. So if I see something moving to the upside, it looks like it's trending nicely, I would be looking to get into a market that's trending to the upside. Anything that's moving to the downside steadily and trending, it's something I'll be looking to exit, and I wouldn't be interested in that market unless I'm going short. But generally, we look for uptrending markets, we buy into uptrending markets, and we sell downtrending markets. Okay, so that is it. Tomorrow we'll take a look at some stocks I believe are it's better to let go out of your portfolio. Also, tomorrow we'll be taking a closer look on some defense stocks, some defense related stocks. We are in a time where we have saber rattling and increased tensions, geopolitical tensions with North Korea. So a lot of folks have been very interested in the defense sector. So we'll take a look at some defense names. So we have a quite a good show tomorrow. Defense, the defense sector, and also stocks I believe are immediate sales. Immediately you should sell those stocks. Okay, so until tomorrow, thank you for listening. Remember to like the video. Also, if you are new to the channel, subscribe to the channel, and so you can get notifications anytime we post another video, which is every market day, Monday to Friday. Thank you all for the good comments I've been getting, and I hope you all have a wonderful day. Thank you.